Hi, it's Dave. Welcome to episode 276. Today, we've got a special live episode here. I'm joined by Emmet Peppers, and we're going to talk about ARK Invest's $3,000 Tesla price target. Cool. So I just played the intro clip. So yeah, we've got an exciting week. How are you doing, Emmet?
I'm doing well. Yeah, just been exciting to hear this new ARK report come out, and it's been a tough few weeks with the volatility and growth stocks and tech stocks with the interest rates and so forth. But other than that, I'm doing great. How's it going with you?
Awesome. Yeah, I just came back from a camping trip to the beach or the ocean in Texas. And so, yeah, I've been taking camping trips more lately with my kids, wanting to get them outside and stuff. So been having a good time. Yeah. So
yeah, you have them really well prepared for that from your travels list this past summer, I think.
Yeah, they're like experts. They just like land at the camping site. They know exactly what to do. They're just like naturals.
That's great. You got to keep that going. Yeah, don't let them lose that.
So this week's been exciting. I was actually camping like out somewhere in some distant Texas state park or something when ARK dropped their price target. And so it's a $3,000 price target. What was your first thoughts when you heard ARK Invest's price target? I guess it's for 2025, right? The $3,000.
Yeah, that was my first thought, was just like, wait, is this $3,000 today and then appreciates over time to 2025, or is this 3,000 what they envision in 2025, which then you discount back, to today. And that's what it is, right? It's 3,000 is their kind of like median case for 2025. And then they discount it back at what, 10% or 15% or something like that to present day of, what was it, like 1,500 or something like that, I think, or do you recall what their present day value would be?
I don't think they gave a present day. They gave a bear case of 1,500 and a bull case of 4,000, and their base case was 3,000 in 2025. I think that was kind of their overall model.
Yeah. Okay, and they let us kind of figure out how we want to discount it back to today's value. Then
exactly.
That makes sense. Yeah, I mean, I think it's fair. I think it's a fair price target for my own opinion. I think they're missing, their report is missing some key things, and it's a little. I think it's the median case to me is a little hopeful on the robotaxi being employed, like mass adoption level kind of stuff. But that's just my opinion. Like, I think there's going to be slow implementation. There's going to be a lot of resistance. It's like, imagine like when the elevator operator stopped and it was elevator buttons. That was kind of a trip for the public to figure out. And this is like that squared. That's how I think of it. It's gonna be a big change for a lot of people to suddenly see a lot of cars with no drivers in it. It's going to be a lot of pushback. It's going to take a while. It'll happen in bubbles first, and then over time, slowly, I think it'll be more mass adopted. But that's just my thought on that part of it.
Yeah, like I've been, getting into the whole full self-driving and the technology, the software behind everything, especially with like James Dalma and interviewing him. And I'm at a place where I'm like super convinced that full self-driving is here. And I really think it's a solved problem. It's just really just a matter of Tesla just finishing what they've started, and it's inevitable. This full autonomous driving is coming. I think it's going to surprise people. I don't know the exact timing, but my guess is next year, probably mid next year, we will see, the first deployments of robotaxi, probably in like Chandler, Arizona. That's where, Waymo is testing their robotaxis. I wouldn't be surprised if it was before next year and before mid next year, actually. But the question, I
agree with that. I agree the technology is there sooner than people think. I just think the adoption by the public, other than a couple test areas, is going to be slow.
Yeah,
anyway, I think. Go on what you're saying.
Yeah, so I mean, I used to think that way actually. So I used to be kind of more skeptical on, especially the timeline and the adoption. But what has shifted me to kind of be more bullish or optimistic is Tesla so close to solving this. And as they put more compute power and they release Dojo on training and they really get this nailed down, I mean, by the end of this year, I think full self-driving will be pretty amazing. And it's just when you turn on the switch for more training, you know, they've got this pseudo LiDAR thing where they already are, you know, mapping depth. They're doing bird's eye view. So they have a 3D imaging of everything going around. And all of this is like, it just needs that extra boost. And so once Dojo gets online by the end of this year, next year is going to be insane. I mean, full self-driving is going to be so good. The improvements are going to be so crazy. And so I think—
I hope you're right.
Yeah, so what's going to happen is they're going to release this thing in a limited area, but it's going to get so good so fast because the technology is just— you're just riding the improvements of the neural net training, you know, and their supercomputers getting online. They have the data. And so this thing is going to get so good so fast that within like several months after, you know, Arizona, this thing is just going to— I think it's going to be ready for prime time, you know, sooner than people think, because it's largely a technology problem. Like if this was incrementally getting better, like, you know, like kind of a linear thing, I would agree that it would be a slower rollout. But if this thing is actually like more like a hockey stick, where after a certain point, like it just leverages data and neural nets and Dojo supercomputer, then this thing is going to get so good so fast.
I think I agree with you on that, but don't you think the public perception is the problem? That's my opinion, is that it's such a radical change from how everyday life would work.
Yeah.
I think it could be a lot of pushback, a lot of like legislation pushback, you know, unions. There's going to be so many threats to people's jobs, like just people feeling like it's unsafe, even though it isn't. Even though it's safer, the first accident there is with, you know, we see these reports right now, and it's like, it's just going to cause delays, in my opinion. Yeah. But that's my fear. That's what I think.
I mean, you're going to have crazy, you know, battles like in New York City, right? I think there's like 13,000 taxi drivers. It's so ingrained. Like, you know, you have $1 million, you know, taxi medallions, et cetera. But
or delivery people.
But the way I look at it is it comes down to how good full self-driving is. So here's the kind of the problem of, I think, comparing it to previous like accidents and stuff, is everything until this point with full self-driving hasn't been good enough. It's all been like not good, like incomplete, insufficient.
That's the perception and the reality.
And the reality, right? Everything. So if you get into accident, it's just a poor, bad, you know, autonomous driving computer getting into a bad accident, right? So it's all bad. But there's going to be a point where Tesla breaches this gap and full self-driving actually gets really good. And once it breaches this gap, then it just gets better super fast, because now you're in this different territory where it's not like incomplete and bad, but it's like really good. And it just gets better and better and better super fast. And the question is like, okay, how does regulators, like, how do they approach this with a system that has eclipsed, you know, human driving, but is getting better, like at a breathtaking pace?
I think they'll be very patient. I think they'll want to be very patient. That's my problem.
Yeah, I think they'll be patient, but the improvements are happening so fast because it's already past escape velocity in a sense, right? So it's,
the reality has taken off escape, but the perception that follows, I think, is slow. That's my thought.
Yeah, I think perception will be slower than what perhaps the ultimate, like, you know, bullish of bulls think, but I think ultimately it's how safe, you know, full self-driving is. Yeah. And if the data just, you know, shows this increasing safety that just wipes out human drivers, it's just a matter of years, you know? Like I would imagine the first year or two, there is that big clash, but at a certain point, it just becomes ridiculously obvious, you know, that these robot cars are safe.
It's just, you just think about the media though, right? I mean, think about how terrible it is for our for us having informed opinions on stuff. And you know, you and I, we study Tesla, and everyone who's watching this channel probably studies Tesla closely, but we're the 1% of the people knowledgeable on Tesla versus the rest of the world. You know, the rest of the world isn't studying self-driving or Tesla, and they're going to be informed by the media headlines more than us. That's what I'm afraid of.
Yeah. I think, so my angle with ARK Invest's kind of price target is, they're assuming like different numbers, et cetera, for, autonomous, but so autonomous ride hail, their bull case is 327 billion revenue. And then they also have this thing of if it's a bear case and Tesla can't get autonomous working, they'll do a human kind of ride hailing case, which their bear case is 42 billion for human ride hailing. But the way I look at it is, I don't look at it like, I really think it's like 98%, like 98% confident that Tesla really nails this and solves this by end of next year. Like really gets robotaxi.
I think technology wise they do. And maybe they're big enough where they can push their weight around by then to like influence perception better versus being a small company. Now they're like the biggest auto company by far, so maybe they're big enough where they can do some stuff to change the narrative a little bit better in their favor. That's what I'm worried about. In the end, the data will speak for itself, and regulators should follow that statistic, those statistics, I would think, over time. But I wouldn't be surprised if they're dragging their feet for a while. And that's what I'm afraid of. It's going to take longer. But I do think the price target of 3,000 kind of in by 2025, I don't think that's unreasonable, even if I don't think autonomous driving will be like mass adopted by then. It might be, but I'm not sure of it. I think it's, it might take longer to get mass adoption. But I think there's other things they didn't include. The main things I don't think they took into account in their factors are obviously Tesla Energy, how that develops, and Tesla Solar and the semi truck. They didn't really, but I think there's these unknowns that we don't know yet. Like if they do an electric vertical and takeoff and landing supersonic jet, right? I think the plans will be out by then, by 2025, and that'll pump up the stock significantly in valuation. Like if Tesla did this with autonomous cars or doing this, what are they going to do to the jet industry? And that'll be like a couple $100 billion at least, or a few $100 billion in market cap added to the stock, excitement. And then there's like the neural network as a service, which is a new industry. And I think that can really expand fast. You're not going to have regulation pushback like with cars and unions. And that's like a technology, like a software as a service technology that's just going to just kick off like that and just pump up margins and revenues quickly for all kinds of use cases. So I think those types of things were not part of their target. And because of that, I think, that 3,000 number is not unreasonable, even if I don't agree necessarily with the likelihood of the robotaxi implementation by then.
Yeah. One point or one interesting angle is that whether or not you completely believe that by 2025, robotaxi will be rolled out in a significant way, it's also one angle is like the investor perception, that if they perceive and conclude that Tesla has solved this problem, it's just a matter of time before they dominate this new market, trillions of dollars of new market opportunity, that starts to get factored into the stock price. So that's kind of the question mark for me is, as Tesla starts to roll this out and starts to show that, here's the thing, Waymo and others are showing
they're doing something different.
Yeah, they're doing full self-driving, so-called by LiDAR, but it's not scalable. They're not. Yeah. It's you can't scale it to millions of cars. And it's limited in its functionality too. But Tesla has a true scalable solution. If they nail it, and they show people like robot. Imagine next year, hypothetically, Tesla releases a few hundred robotaxis in Chandler, Arizona, and it's taking people point A to point B, and it's going smooth, and Tesla's trying to line up more cities. And as they get to more cities, let's say by the end of next year, you could start to feel the investor perception perhaps start to shift, to think, oh, wait a minute, Tesla isn't a auto company anymore. They're getting into this completely new software space, right? I mean, think about it. It's like the thing about autos is like it's a low margin hardware business. It's hyper competitive with all these OEMs, dirt cheap costs. But you get into autonomous driving, you get software like margins, and it's a platform. It's like you're taking a cut of every transaction. It's like these platform plays are like the best in a sense.
They are,
and that's what Tesla has, and it's so different than what they're doing right now. that I don't think people are understanding like what's happening here. There's going to be, I think, a transformation in the complete DNA and the essence, the identity of what Tesla is. Up until this point, Tesla has been like an auto company, but they're making the shift into this platform company with software or transportation as a service that is hugely more profitable and more expansive than a typical just auto company. And at some point, I think if Tesla can show that they're really nailing it and executing, then that perception and the value that investors give perhaps, will shift regarding Tesla. What are you thinking?
Yeah. So let me give you a different angle of how this could potentially play out. So I think in China, it'll get validated there first before the US. Adoption will take over in China, and then they'll put more pressure in Western society, Europe and US to follow suit, soon after, because China's economy will clearly benefit from this new innovative technology being mass adopted in China because the government frees it up, basically. And that's how I think it could likely play out, And then in China, you have what I view as the likely second place to Tesla globally over the long term, whether it's XPeng, NIO, Li Auto, or some other company, that comes about. I think they're going to have the technology close behind Tesla, like they're already doing self-driving, trying to catch up to Tesla, and they're just going to catch up maybe a year or two behind Tesla, on this technology. And by that time, that's when, after that time, then they catch up on the self-driving neural networks in China is when the rest of the world's going to be opening it up, I think. And then you'll have other competitors to Tesla. So it's not going to be a winner takes most like we hope. Tesla will still be the brand that's the leader, but I still think there's like in 5 years, these Chinese automakers could be like the second and third place automakers in the world to Tesla, and maybe there's a Volkswagen GM conglomerate put together that buys AI or some other startup to try to compete as well. That's one scenario I see playing out where China plays a critical role in having competition to Tesla globally. Right now people are like, China doesn't export outside of China, but this is 2021, 5 years, a lot of things are going to change, and they're already exporting to Norway, I think, XPeng, and other parts of Europe maybe. But I think that's going to, I think China wants to position itself to be a leader in automotive technology and manufacturing. And, Tesla and China are both using each other to kind of help each other in their achieve their goals, I think.
Yeah.
That's what I see.
Yeah.
I think that's one possible.
Yeah. I think, this whole thing of full self-driving competition, is going to be fascinating how it plays out. I'm kind of thinking this thing is, there's two angles. One is like other companies are going to find a way to release autonomous driving, which of course they will. But the question is, what's the interaction? What's the dynamics between their solutions and Tesla's? Will Tesla's solution be that much better, like so much better that it just takes an inordinate, like a crazy amount of market share, or can competitors really give something that will give, will compete, equally or with Tesla. And I don't know about that, it's just because it's so data centric. It's going to be tough. Like they can come up with a okay solution, but that's not good enough when you're talking about people's lives. You need the best, So anyways, it's definitely going to be something.
It's going to be fun to watch.
Yeah, it's going to be fun to watch.
I don't know if you saw, but I loved your chats with James on this stuff. It really is helpful to learn all the technical stuff, that he's has an expertise in. And I think there's going to be podcasts showing up soon of people creating, daily and weekly podcasts just on autonomous driving developments or industries developing businesses, just like you have daily podcasts of cryptocurrency now. And, 5 or 10 years ago, there was no daily podcast of that, right? But now you have a ton. I think in a few years, you're going to have these daily podcasts of all these new autonomous driving developments, and it's going to be an interesting industry that just is going to flourish and really take off in 5 or 8 years, especially.
Mm-hmm, definitely. Let's see. Let's go to some Twitter follower questions. So Minya Bidna says, can you ask Emmet about possibly his place for Tesla options with new ARK price targets? And if he sees this as another one of those opportunities, would obviously not be as big as S&P 500 inclusion. And if so, what would he be looking at targets and time frame? So yeah, do you think, do you have any ideas? Like, do you think this is an opportunity, or are you just like, it's too unclear?
It seems it's unclear because we've gone up so much. I mean, I wouldn't be surprised if we get a little bump and maybe some momentum if the macro market, plays well with the interest rates again. And so I wouldn't be surprised if this price target helps but I'm not counting on it like I did with the S&P inclusion. I don't think it's like as high a probability event where it's going to like double in price in 3 months, like I thought with that. I mean, we're talking, this is a 600 billion market cap company right now, 700 billion, somewhere in that range. I mean, doubling that valuation quickly is a big step, could happen. But I think with the options, the way I'm looking at it is, long-term options only if the stock really dips a lot, and if it goes down to like the 400s again, which I think it could, if the whole market's kind of deflating a little bit. Then I'd consider buying long-term options in Tesla again. But I might rather wait like a year or two to see if it goes there first, because even though they have this 3,000 price, stocks don't move up smoothly. We've seen it, like Tesla went flat mostly for 5 or 6 years, and then it spiked up 10x in 18 months, and that could happen again. Maybe we kind of trade flat between $300 and $800 or $300 and $700, something like that, for like 4 or 5 years now, and then it spikes up to like $3,000 in 2025. It's hard to really know with the long-term options. I mean, we've talked about this a lot. I mean, is your feeling kind of similar about the stock that's so unpredictable after such a large run-up?
Yeah, I mean, it's a tough one because there's different things. There's been this huge run up the past year and a half. Also, these growth stocks are being put into question. There's like, with interest rates and just the mood around the sentiment around this whole thing, there isn't as much FOMO, as like when it was going up. And so I think, and then ARK Invest releases this price target, and it's a different time than last year. Like 6 months ago.
Yeah, very different.
Yeah. So I mean, I wouldn't be surprised if there was a bump, in the stock price, but I would be very surprised if it was a sustainable, like it took us past all-time highs, in the next couple of weeks.
Yeah.
I'd be very surprised. How about you? How about yourself?
Yeah. I think ARK is seen as kind of like the redheaded stepchild in institutional Wall Street in some respect. Like, I think they're getting a lot of respect, a ton of respect amongst us, like retail folks, and some institutional people are like, it's raising their eyebrows, but their whole model is different. And I respect it greatly. I love what they're doing. They're disrupting Wall Street in so many ways, but that doesn't mean Wall Street's accepting their research for what it is when they should, So I don't know if institutional money is going to follow ARK's research when they should, and it's been proven that they should. So it's maybe this next time in 5 years, if it does go to 3,000, maybe from that point forward, institutional research will catch up and be like, oh, we better listen to whatever ARK puts out and just follow their price targets more than our own.
Mm-hmm. Yeah. So tomorrow we're interviewing ARK Invest's Director of Research, Brett Winton. I'm excited about that. How about you?
Yeah, very excited. I get to kind of co-interview with you. This is going to be a fun chat with him. He's, great timing. We, right after their release of the price target, and Brett, I've listened to a number of his interviews, and he's super smart, intelligent. I mean, most of the ARK, pretty much the entire ARK team is super bright and intelligent in their own respect. But this guy, Brett, he's been there since the beginning with Kathy, and he's, he knows his stuff. He looks at the world very differently in a good way. And I think he's a critical part of ARK's success. So it'll be really fun to chat with him.
Yeah. I think over the years, ARK has gained a lot of my respect. And when I listen to Brett, this guy, man, I'm impressed. I think he's really got kind of like the first principles of a lot of this analysis. Like you get a lot of the stuff from, different videos or articles, but Brett really seems to like know his stuff with Wright's law and like why the technology that they invest in is so like important, or kind of like I'm fascinated. So I'm wanting tomorrow to really get down into what makes ARK Invest research so different, like what is its meat, and its core.
Yeah.
It should be kind of interesting. They usually have like a few day review period. So the video might come out Wednesday or Thursday of this week. So just to give people a heads up. So Shmoo from Twitter says, which method is better for long-term investors looking for income? Selling short-term, very high out-of-the-money calls periodically, or selling a small percentage, 3 or 4% of Tesla position each year? Which method will have higher returns long-term, 10 to 20 years, in a taxable account? Do you have any thoughts on that?
Yeah, I know we chatted a little bit about stuff like this recently, and between those two options he listed, I would say selling, short-term, deep out-of-the-money calls, maybe on, part of your position, not all. I don't know. That's what I'm considering doing, because then you kind of keep that upside for the stock appreciating to $3,000 maybe in 2025, as long as it doesn't double in a short period of time, which it could do obviously, but I don't think it will. So if you're just selling these, deep out of the money covered call short term for, a few pennies before the steamroller, then there's ways to do that. And if you think the stock's going to get to your strike price, then you can buy them back and sell another week or two out of the money calls at even money, for example, and try to extend it, to let the stock kind of cool off or come back down. And you can keep doing that theoretically, but I don't think that strategy would have worked, 12 months ago. but I think that type of volatility in the stock, I don't think we'll see that in a long time again. I could be wrong, but I don't think we're going to see the stock going up, 500% in 6 months or whatever it did, around a year ago this time. So yeah, that's my thoughts. I wouldn't want to sell. You could sell 3 or 4% a year too. That would be 30 years. That's a long time. So that could be fine too. But taxable account, you're paying taxes either way, and I guess you're paying long-term taxes on selling 3 or 4%, hopefully, versus selling short out of the money covered calls. Then you're paying, income tax, full income tax on that. So, what do you think, Dave?
Yeah. So the past few weeks I've been experimenting with, selling some covered calls. It's like I have mixed opinions about it. I mean, it seems obvious in some certain ways to sell if you have a large holding, where you could, for example, you can sell calls 30% out of the money,
Yeah.
You could sell 900 or 1,000
even 50% out of the money.
Yeah,
it's crazy.
And for example, if you have, like for example, in your case, let's say tens of thousands of shares or something, like it could actually add up to significant income, and so, I'm torn because like it seems like an obvious thing, but then there's always a slight risk of your shares getting called away. And so there's different strategies on how to maybe roll up your calls. So you close out your calls. So I had a chance this past week to talk with Gary Black, who's on Twitter. He's been selling these covered calls for the past year. And he kind of coached me through his strategy on how to sell covered calls, how not to get them called away. But it's not foolproof. Like you still can get your your shares called away. And so there's always that risk. But I definitely think, it's something I'm thinking about a lot. Just like, just the pros and cons of all that. Actually, there's one more question from Alan. It says, why don't you sell covered calls way out of the money on all your current Tesla shares? You can buy them back if it gets too close to strike. Gains should outweigh any losses. So again, this is another whole thing is, let's say hypothetically you had 100,000 shares, you could sell you could sell way out of the money, 25 cents, let's say cover calls like $200, $300 above the current stock price, expiring this week even, and you can make, a good amount, what are your thoughts with that?
Yeah, I mean that's too risky for me on everything. Just because there's always the white, what I call the white swan event. It's not really the white swan the way Taleb talks about, but I think of it as a white swan event where it's like a black swan event, but a very good event. And so it's
Mhm.
like China decides to infuse X billion dollars in Tesla to build 10 factories in China, and that announcement comes out over the weekend or something kind of crazy like that, that no one really thought of as ever happening, and then it happens, and then the stock like doubles over the weekend, gaps up, and then you just lost all, you
Mhm.
lost all of it then, so it's like I don't want to miss that chance of happening. It's like a lottery ticket, but it's a lottery ticket. I think with Tesla you have a chance of that versus Elon running the show. It's like there's a chance of that happening with Tesla more than any other company, something crazy like that. And so that's my worry is, and it might not be so extreme like what I described, but there's all kinds of things we haven't even thought of that I think could potentially really positively impact the price and have it gap up, over a
Yeah.
weekend or overnight somehow suddenly.
Yeah. Yeah. It's like, that's kind of like my nightmare or, selling cover calls is I've got like
Yeah,
I've got this ideal number of shares that I have,
yeah,
like it's
yeah,
kind of a long-term, shares I want to keep by in 2030. And
yeah,
I know if I just hold on to them, like I'm very
yeah,
confident in the share
yeah.
appreciation.
Me too.
Um,
Yeah.
but yeah, it's like the white swan event, it's just like goes up so much, and you could try to roll out your calls, but I don't know. It's like, yeah,
Not if it gaps up though
that
overnight.
much.
That
Yeah,
wouldn't
yeah,
work. Yeah, it wouldn't
yeah.
work. That's the problem. Yeah.
Um, yeah. So here's a YouTube comment says, "Tell us about this Gary Black strategy." Yeah, the Gary Black strategy. I need to have him on my show to describe it, but the gist of it is you only sell cover calls when the price is down, not up. So on that day, and then you sell for a week out or that week. So you sell weekly cover calls because, in his opinion, the longer it is, like 3 or 4 weeks or a few months, he doesn't have confidence to predict the major catalysts or events during that time. So he wants to have a short period. And then if the stock runs against him, so if the trade goes against him, then he will roll up the calls to the following week 10 or 15% higher. So for example, if he sold 800 strike cover calls and the stock price went from 680 to 780, he would actually roll them up. As long as it's later on during the week. He wouldn't do it early on the week. He'd roll them up to, let's say, 820, 830 or something, or 850 or something, something 10 or 15% higher. And he keep on doing that. And in his opinion, he's done this 30 weeks out of last 50, and he hasn't had any shares called away with that strategy. He's very confident that he could, continue to do that and make a good amount of income, just by doing that strategy. But I'd love to, dive into it more with him with the specifics. Yeah, good
That's why
stuff.
I would. That's why I would like to do it with like half my shares or a quarter of my
Hmm.
shares, and be a little more aggressive with it too. Maybe like where I feel like I can, you know, be more risky. So if it does get called away, it's almost just like a limit price I set out there. So if I'm selling 900 strike calls, for $3, 2 weeks out or 4 weeks out or, whatever, I can do that. And it's almost like a limit price. I think of that's how I think of it, as for a quarter of my shares or something. And if the stock goes up like ridiculous to 1,000 plus, and I'm,
Hmm.
overnight on something crazy, then all right, well, I lost a quarter of my shares at a limit price I was comfortable with, and it's like still have 75% or 50% or something of my shares. That's why I wouldn't do it on all my shares, because I
Yeah.
know someone had asked that. Yeah.
Yeah, definitely. So Matt Market Scraper says, I also never hold any cover calls over the weekend for Tesla. So yeah, Gary Black also was noting that he doesn't want to hold over the weekend because who knows what will happen. He mentioned when I talked with him, like Kathy Wood's price target
Yeah.
could come out on a Friday,
Yeah.
like it did before, and then that could mess up your calls that you had sold. Yeah, definitely interesting stuff. Let's go to Mohammed Famin from Twitter. He says, Emmett, what are your criteria for stock selection in your fund? And is there a hedging strategy for bear markets?
Yeah, I wish I had a hedging strategy for bear markets in place right now, but I really I don't. It's mostly a growth long only fund mostly. Occasionally, maybe I'll buy some puts on some index puts, or I'll my hedging strategy is sell out of the money covered calls on some things, sort of like generate extra revenue or alpha than otherwise just holding the stock as it's going down. So I don't really short stocks really. I just think this environment that we've been in is a little risky to short anything, whether it's, there's a lot of SPACs out there that don't have any product for many years, like QuantumScape, for example, and I feel like, oh man, those are great. Those would be great shorts, but look what's happened. Still have this crazy valuation. You're not making money shorting those stocks in this environment. And you have to be very patient. And in between now and being patient, if you're right, the stock could still double between now. So shorting to me is not as attractive. I'm trying to go for bigger returns than, making marginal successes on shorting stocks here and there. And so for picking stocks, it's tricky. I mean, I just try to remain curious. I like to, learn about the world and what's going on with technology in the future and how I think things can play out. And the more curious I can be in researching ideas and things that are happening in the world, with technology and changes and how we're going to live our life, then the more ideas I get for investing. It's almost like as I'm learning about things, whether it's this metaverse, which is like a word that's overplayed now, just like AI, but like Roblox or Unity and how those could play, or whether it's electronic robo-taxis or, all this stuff. Like I'm underlying my research in that stuff. I'm always kind of thinking of what's a good investment opportunity. So it's like, that's kind of ingrained in the back of my head always. And so I'm always kind of listening for ideas and, so there's, I don't have anything with the same conviction I do as Tesla, but there's a number of stocks I'm favorable on. And we talk about Lemonade, and someone had asked about that, and that's been volatile lately. But I think Lemonade, for example, I've listened to the more recent interviews, and I think he was on the CEO was on Meet Kevin recently. I listened to that, and I like their model because I think it's disrupting insurance. They built their own backbone technology they can keep iterating on really fast, with their InsurTech business. And there's other InsurTech plays, but from what it sounds like, from what I've researched, is they're the only ones that really built their own A to Z backend, minus earthquake insurance or life insurance. But other than those two things, it seems like everything is in their control, and they can easily update a few things or tweak a few things here on the fly, whereas other insurance companies, it takes weeks or months for them to approve new releases. And InsurTech companies that are coming out, they're really relying on third-party backbone infrastructures. So it reminds me of Interactive Brokers in a lot of ways, and how Interactive Brokers has disrupted the brokerage industry, but with a much better user interface. So Interactive Brokers has a terrible user interface, and they're still disrupting the brokerage industry, right? I mean, 10 years slower than it should have happened or whatever. But, Lemonade is developing their own backbone, similar, but in insurance, and they have a great user interface. So I think that combination, to me, is attractive enough to, to still like them as an example. Anyway, what do you think about
It's too bad Interactive Brokers didn't do a Robinhood type of app or strategy. It would have been the real thing, not what we have.
I'll tell you, when I worked there, when I worked there for years, I always told the founder, I was like, when are we going to change the username policy? Because the username is so unorthodox. It's 5 letters and 3 different numbers. It was you couldn't have the same, why couldn't you just have your email address as and so that was just a symptom of the many issues of their user interface. But I was really infuriated just that we couldn't update the username to be something, whatever you wanted it to be, versus the weird username creation policy they have. They've improved it a little bit, but it's still you have to have 5 or 6 letters and 3 digits, and that means you have to have a weird username just for Interactive Brokers that most people like to have the same username for multiple things. They don't want to have a different username for every single online system they're using, so it's just that's just a big issue by itself, but that's just the first entry point into the technology people have. And then there's other issues similar, anyway, but overall the system is incredible. If you run a family office or your institution, it has great cost effectiveness and it's disruptive. And so you have your secretary do everything, for example, and they have to put up with all that crappy user interface sign up. And then you just have to kind of learn the weird system like a Bloomberg terminal. It's not terrible, but you have to have some kind of train you. And then once you learn it and you had a secretary, just some frustrations, but overall you're saving a ton of money and you have a good value proposition. So yeah, I mean, that's their user interface in a nutshell, their problem.
Yeah. I noticed with big companies or just even with smaller companies too, just there's like inertia, there's like energy, like it's hard to change things because it takes so much energy to change something and people don't think there's a lot of benefit to changing, let's say the username. They're like, who cares? Like, it's working so fine, we'll introduce more bugs and just like, it just creates more problems, unless like you have a CEO or a leadership that is forcing change, saying we have to, we have to beat Robinhood, unless that happens, sometimes that doesn't, change doesn't get done. Lemonade is interesting. I interviewed their CFO, Tim Bixby.
I heard that.
Yeah, I've been wanting to interview him for a long time. Smart guy. I really liked how he was down to earth, how he was able to explain kind of all the business like lines and model and where they're headed. Funny story, that interview was it was very divisive in my family. So my wife, she was like, she didn't like the prospects of the company after that interview. She just felt like why is the company choosing kind of revenue per user over kind of the customer count so early on? Like, can't they achieve higher growth while still improving revenue? So she was net negative. For me, I was actually more net positive. I felt like they still have confidence that they're growing and it's not an issue. But this past quarter, it was one of those take a moment and pause for me quarters. It was kind of like, wait a minute, 6% quarter over quarter, customer count growth. You got to do better than that,
That was a tough headline.
Yeah. So for me, it was like, hey, I'm not going to sell, but I'm gonna be anxiously waiting for the next couple quarters to see if if they're getting out of this or to see what's going on, But yeah, that's kind of my 2 cents with Lemonade at this point. Roblox, were you able to buy any Roblox the past week or two?
Yeah, I got in some on the first day of the direct listing and planning to hold it. And I think, it's funny. One of my oldest kid, I signed him up with some tutoring sessions with some like online tutoring to teach kids how to use the Roblox development studios and stuff. And, and I've sat in to watch the 2 sessions they've had so far, and really great, recent college graduate kid doing a Zoom with my 8-year-old and showing him how to do, and my son is like into it and like really clicking things and trying to figure out how to code this world he's creating. And it just gives me more confidence that this ecosystem, as long as they can keep the developers or the incentive going for developers going and growing, it's going to be that self-fulfilling loop of, better content creates more users, which creates incentive for even better content, which creates even more users, and it's just going to be kind of like a self-fulfilling loop. So as long as they can keep that going within the Roblox ecosystem efficiently, I'm pretty comfortable. And I know Unity, people say, oh, Unity's another big play, and that's a interesting play too, but it's not really competing directly with Roblox. Roblox is its like own ecosystem. Unity just kind of provides, I guess, the backbone technology for games to be designed, in their own ecosystems in their own right, I guess, right? So I do like the ecosystem play with Roblox. That's my thoughts. What have you thought about it, or did you get involved in Roblox at all?
Yeah, I mean, I bought some at Open on the first day. Not that much, just kind of dabbled. I'm kind of the valuation just kind of jumped out. I'm like, okay.
Yeah, it's high.
Which it definitely could grow into it. I mean, it all depends. Like the other thing is they're coming off of the whole pandemic, so people are going back to work, to school. So it's kind of
And I think that
questionable.
expectation is set in the price already. Like I think everyone realizes that, and that's what I think there's upside surprise if it's not so terrible where it's like negative and it's like there's a little bit of growth even. I think anyway, go on. I didn't mean to interrupt you, but I
Yeah,
think
yeah.
everyone is sort of afraid of that too
Yeah,
already.
yeah. So, yeah. So, I mean, I'm wanting to build up a bigger position. It's more about timing, and but I'll probably be, just adding. I like the company. Everything. They seem to have the pieces, in place
Hmm.
too. But it's definitely a long term play.
Yeah.
Like they're long term.
So is Lemonade. Lemonade, I
Yeah,
think, is long
very, very long
term,
term.
and that's like 5 years really
Yes.
to,
Uh-huh.
you know,
Yeah, yeah.
and Roblox maybe 3+ years. I think you'll see some real fruits if it works out, I think.
Yeah, yeah, they're both definitely shooting long term. Um, a couple people have been asking about selling puts. Yeah, what are your thoughts about selling puts to raise income?
Yeah, I've done that a few times. I've experimented with that. It's worked out. It seems a little risky, I think the best time to sell puts is when you're like really freaked out about like the market tanking, and that's when it's like scariest. It's like going into that, like if you're afraid of horror movies, well, now you got to go into like the scariest of horror movie theaters and be confident you're going to come out okay. So it's like when the markets are crashing, that's when you want to sell the puts. You don't want to sell the puts when you're like the market's up, because that's when it's most dangerous, I think. And so it's tricky in that way. And I haven't figured that out yet to be comfortable. I just know enough, like, okay, when the idea sounds good to sell puts, that's probably not the right time to sell put. When it feels good, I got to
Hmm.
do it when like my stomach's turning. And I'm like, oh, I've lost so much money from the market tanking right now. Like, I should sell puts, and that doesn't sound good because you're like, um, but it's just one of those things. It's like selling covered calls. Like when the market's tanking, you're like, I got to do something to generate revenue. I'm going to sell covered calls at the lows, and then you're just going to get called out when it bounces back up. But when this Tesla stock's going at new all-time highs at $900, selling covered calls then would have been perfect.
Hmm.
But you don't want to. You're like, how high can it go? So it's like selling the timing the puts and the calls. It's like it's tough because it's like you want to do it when you feel like you don't want to do it. It's hard.
Yeah,
It's like it's tough.
yeah.
Have you sold any puts or done that?
No, like yeah, it's like yeah, it's I don't know. I feel like um in some ways like I'm willing to prioritize kind of more exponential gain. Like that's kind of been
Mhm.
my whole thing. I'm also a little bit with even generating income with cover calls. Like I kind of question the whole thing of, okay, fine, I can make some income, but is this what I want to be focusing on? It's like, it's like,
Yeah, yeah.
it's like
It
I'm
can take
trying
a
to,
lot of time and energy
yeah,
if
I'm
you're
trying to
rolling it
make like
over every
what, a
week or
couple
two.
percent a year or something, right? Which could be great,
Yeah.
income, but it's like probably would be a better focus of my energy would be how to exponentially grow. But then I'm in a tough position where almost all my holdings are in Tesla, which I don't want to sell. So it does put me in a difficult, I think, place right now. But
Yeah.
yeah, yeah.
Yeah.
Um, um, let's see. Oh yeah, I wanted to ask you about selling cover calls in your IRA. So
Mm,
yeah, yeah. So I mean, you
yeah.
mentioned to me before that you had sold. Okay, so with your IRA, you put 10 million into a value kind of diversified fund, right?
Yeah, beginning of January, it's done pretty good. Yeah, I'm lucky I did that then.
Yeah,
Yeah, or it was
so
mid-January, end of January, I think. Yeah.
so it's kind of more in a safe place. And then you recently mentioned offline that you sold some cover calls on your long-term shares, right, in your IRA. Can you explain kind of what you did
Yeah.
and why you did it?
Yeah, so the IRA account, that's in my control. Like I put the portion with the ETF value stock strategy with the RIA that's running a couple of ETFs on value stocks, and then I have some SpaceX in my IRA, and then there's a big chunk that I just have full control. It's just Tesla shares now. A lot of it's gains from that S&P 500 trade, which was great, and so I just have shares. I don't have any long-term options in my IRA, or call options. And so I was holding shares, trying to figure out what to do with it. And I was like, oh, I should probably diversify and sell some and just start playing around in my IRA a little more aggressively, and so I sold, instead of selling shares outright, I sold I think I sold December, what was it, 13, I forgot what I texted you. It was like 1,300 strike or 1,200 strike calls or something. It was September. It was like far out, 6 months out, but I sold it for like $70 or $69, for like on 7,500 shares, and it generated like 500,000 of cash, and so I'm using that cash to like invest in some of it is being used to invest in like a small business that I'm looking into, and the other half is being used to invest in some kind of like tiny like penny stock type stuff I'm just experimenting with in the IRA account, trying to get like 10x returns on like very risky things that I'm not researching a whole lot, that I probably should research more, but just don't have time to research all these penny stocks. But I'm interested enough to like put a portion of my IRA account in them. So I thought of like selling those covered calls as like having a limit order at like $1,200 or $1,300, whatever the strike price was. But at the same time, I'm also getting cash to do these other things, and if it doesn't ever get to $1,200 or $1,300 by September, or even if it goes to $1,200 or $1,300 in June, but then comes back down to like 1,000 by September, let's say, then I just got that cash. The way I look at it is I just got that cash for free to do those other cool investments with, So I'm thinking about doing that every 6 months until it gets called away, until my limit price of whatever it is, like $400 or $500 above wherever it is, hits. And then at that point, I'll have the extra, I think it was actually 1,000 strike. Sorry, not 1,300. It was 1,000 strike calls, because it was going to be an extra 7.5 million cash if it gets called away. So if it gets called away, I'll just have 7.5 million cash to kind of like diversify more, and I'll still have 10,000 shares in the IRA account of Tesla that I probably won't touch or sell really deep out of the money calls on eventually. But I'll have a lot of extra cash to do stuff with if it goes that high. I don't know. That's what I'm thinking. Because there's no tax consequences. Yeah. It's much more free to like, and I could do more cool things that I think of with my IRA account, right?
Yeah.
I mean, there's tax consequences when you take it out eventually, but between now and then, I don't have to think about it. You don't have to be like, oh, I'm going to pay 50% short term on this or whatever. It's not something I even have to consider in my decision making.
Yeah. I mean, with your personal account, so your taxable account, so are you kind of more cautious with some of your moves because you don't want to pay taxes if you, for example, get called away your shares or something like that?
Absolutely. Yeah, absolutely. I mean, I already paid a lot of taxes for 2020, and it's just not fun. Like when you're paying like all this, the maximum tax rate on things, and I don't really have any special tax evasion or tax special. I mean, I have a couple of small, like I set that foundation up, so I donated stock to that, and I experimented with a little bit with a conservation easement syndicate, which, just a little bit. And so there's couple things I've done to mitigate maximum taxation but it's still, I'm paying a lot in taxes. And I know there's people at my level that, I feel like I'm the dumbest person of them with regard to taxes. I'm pretty sure there's people at my level, based on the accountants I've been talking to or tax lawyers I've talked to recently, like, I'm paying a lot in taxes for most people at my level, and it's just painful to do because the government is like the least efficient use of money. I'd much rather donate money to charity or to small businesses than to give it to the government for a lot of wasteful uses. That's my thought on it. Just a bad taste in my mouth.
Yeah. And then the company you're investing in, I'm guessing it's a startup with your IRA money, right? Or part of it. Like, how are you doing that? Are you able to invest in like a startup through your IRA, and where does it go through? Is it?
Yeah, I did it once before, actually, with a friend of mine. This isn't, the person who's running this business isn't a friend of mine, but a friend of mine introduced me to them. But I did it in the spring, actually, last spring, with a friend of mine's startup company, a small amount. But I used a self-directed IRA custodian. There's a ton of them out there. You You just Google self-directed IRA custodian. But the one I'm using is called the Entrust Group. And so I set up my IRA account with them. And so I transfer cash from my Interactive Brokers IRA account directly to the Entrust Group IRA account I set up with them. And there's no, it's just a IRA to IRA transfer. It's no tax event or anything. And so then I have the cash with the Entrust, and I can use it to you can use that cash to do all kinds of alternative investing. You can invest in a hedge fund from there, or you could invest in a small business, which is what I'm doing, or a special purpose vehicle fund for SpaceX, which is what I did in the summer, or you can invest in real estate with your IRA account. There's all kinds of cool things you can do with your IRA account if it gets big enough to that point where it's worth considering.
Mm-hmm. Do you think your IRA account will eclipse your personal account at some point, or do you think that's going to be hard?
I think it's possible. Yeah. I mean, I'm given that I'm paying crazy, like if I pay all the taxes on my personal account, it's pretty much equivalent to the IRA account at this point, so but the IRA account you have to pay taxes on later when you take it out,
Yeah.
but you don't have to I wouldn't have to do that for 20 plus years, 41. So it could just grow exponentially from here potentially until I take taxes out. So yeah, I mean, I think the IRA account, and I could be more aggressive with the IRA account because I'm not afraid of paying taxes. And maybe if I'm more aggressive, I can get better returns, or maybe not. Maybe I lose it's more risky. My personal account, I'm not being quite as risky. I'm just holding these Tesla shares for a while because I think it's, like we've been talking about with these price targets. I think $3,000 a share isn't I don't think I think that's very possible, by 2025 for other reasons, not specifically just why ARK says so, but I think it is very possible.
Mason Thomas on Tesla says, can you talk a little bit more about Roth IRA? I'm 22 and in a low tax bracket, but say I invest in a stock for 5 years and then sell. Is it better to do that in a Roth rather than a regular individual account? Would it be better paying early withdrawal penalties versus capital gains tax?
No, I mean, I'm not an accountant per se, but my thought is that a Roth IRA is the best thing to set up when you're young, because the thought is when you're 22 or 23 is that you're going to make more money as you get older. You're not going to, your low income tax bracket you're in at 22 is probably, you're assuming that it's going to get higher over time when you get older, if you work hard and successful. So that's why it's a good idea to set up the Roth IRA as early as you can and start contributing to it. So that when you get older, it's tax free when it comes out of retirement. And then if it grows to be something astronomical, then I think there's certain things you can do to take money out through some kind of annuity or something. It's a great problem to have if you get to that point. But most people, there's certain things you can do to take money out early of your IRA. I think if it gets to a certain amount, like through an annuity type withdrawal or something.
Mm-hmm. Yeah, I think with the Roth IRA, the strategy is you stick as much as you can in there to the limit, and you just invest. You don't withdraw it. You just continue to just make that.
Yeah, you don't want to withdraw it.
Yeah, you just want to compound that. Grow that over time, and it can be a monster because it's you don't have to pay tax even when you withdraw it. It's crazy,
Yeah. I mean, you think about it though. I mean, it sounds great, but if you think of it from a mathematical level, almost like if you start out with, let's say you have $2,000 extra cash, and you can put it in a traditional IRA or a Roth IRA. Mm-hmm. So if you put in a traditional IRA, it's $2,000, but if you put in traditional, you have to pay taxes first. So you're only putting in $1,200 or $1,500, let's say, instead of to $2,000, right? Well, as they grow proportionally, one might grow to 20 million while the other one grows to 15 million, right? So it's proportional, but you're going to be at a different tax bracket most likely by that time, you got to think, right? And so because of that, the Roth IRA is better. But if you were going to be at the same tax bracket, then it wouldn't make a difference. It's going to be equal amount at the end of the day.
Yeah, I kind of wish. It's too bad your IRA isn't Roth.
Oh, believe me, I wish it was. I tried to convert it, and it didn't go well. I was in the low tax bracket at the time, and I was like, I mean, you never think your IRA is going to grow to
Yeah,
like
exactly.
exponentially like that. Like I thought like, oh, maybe my IRA will get to like 100,000 one day if I'm lucky, you know,
Yeah,
but I never
yeah.
thought it would get to this. Yeah.
So I had a Twitter follower reach out to me a few months ago, and he's been invested trading Tesla, got into options and stuff last year, and then he has several accounts, but one of his accounts is a health savings account, right, a HSA,
Mm.
and he has like a million. 1 point something million in this
Oh, no.
health savings
Hope we got a
account.
lot of surgeries planned.
Because it's like you can only put in a certain amount, but he just went crazy. Just with Tesla
Yeah.
options, he just went crazy.
Yeah.
So he has
A lot of
like
people.
between
Yeah.
$1 and $2 million or something in Tesla in this health
Yeah.
savings account. So yeah,
Yeah.
I'm trying to have him kind of clean up his statements and summarize them. Maybe I can interview him and stuff. He's been working on it
That's
for a
so
few months though.
crazy.
He's
Oh my
done so many
gosh.
trades. It's like
Health
crazy.
savings account.
Yeah.
That's
He's
like the worst type of account to have all that money in. It's like, oh, I better get sick now.
No, I think you can actually withdraw it at a certain age,
Oh, you
though.
can?
Yeah.
Okay.
It becomes
Well, that's
kind of
good
like a
then. That's
retirement
great.
account. Yeah. It's kind of a
Okay.
loophole and stuff.
Okay.
Um, yeah. A couple tweets I want to ask you about. One is you tweeted, I think a week or two ago, you said, prediction, Tesla coin is coming. The opportunity is just too ripe. What do you mean by that?
Yeah, I mean, look, Elon called, Zach Kirkhorn, a master of coin.
That's
You know,
right.
to me, that's like, what? What's going on here? And Elon himself, just like weeks before, was doing like pet projects with his sons, doing like Dogecoin mining, and
Mhm.
he's talked about it a lot. And I think he likes Dogecoin because it has like the inflation, it has like, it's issuing more over time. He likes that aspect of it, for example, versus Bitcoin as, so. I think he's really been thinking about it a lot, and he did PayPal in the past. He had dreams of like all these types of things way before a lot of it has ever come to fruition, and I think he's probably dreamed up some really incredible ways to create, digital money that none of us can even fathom right now. And, I think they're probably developing something or close, in his mind, he's kind of on the edge. Maybe they're already past that tipping point to develop it by calling him master of coins, Zach Kirkhorn, for example. So, and the opportunity is too right because look at the world now. Like everyone's like Bitcoin this, Cardano that, Ethereum this, and everyone's in all these different directions,
Uh,
and I
uh,
think he knows the way to pull it all together. And at least within, maybe it'll just be within the Tesla SpaceX ecosystem in Mars. I don't know, but I wouldn't be surprised if he tries to pull it all something all together just for like a digital money purpose for everyone. Maybe somehow it includes all of them. It's like weighted in different currencies. I don't know. I have no idea
uh,
what he's thinking. He's much more smart, more brilliant than I am on this stuff, but I know he's thinking about it.
mhm.
I know he is. I mean, he talks about it, right? It's caught his attention. And
Yeah.
master, you don't just, it's not a joke, master of coin. It is a joke, but it's like, there's a clue there, it's not just like a joke out of nothing. I mean, what do you think? Don't you think that means something?
Yeah, I mean, yeah, it seems like half his tweets this year have been crypto related,
Yeah.
and so
Yeah. He's really
yeah,
into
it
it.
shows like it's definitely on his mind. He's definitely doing his deep dive on it. Why don't like? Wouldn't you think though, like he would do it outside of Tesla to like, because he only owns like 20, maybe max 25% with all of his options, exercised
Yeah.
eventually. But if he does it outside of Tesla, he could, have a much bigger share of it, or even if he does it within SpaceX, he would have a much bigger
Yeah.
share of it. Like, why Tesla? You think?
Well, I thought the same is possibly does outside, but then he named Zach Kirkhorn master of coin, like he's the CFO of Tesla, and he already bought Bitcoin within Tesla. I feel
Uh-huh.
like, and Tesla's so big, it can almost do anything it wants at this point. It's almost,
Mhm.
it's pretty much at that place, so it might be outside of Tesla. It might be like a Mars coin or X coin or whatever, could be, but I think it's going to have something to do with Tesla, and maybe it'll be like used with the ride hailing versus slash robotaxi somehow. I wouldn't
Mhm.
be, maybe he introduces it at the same time they introduced the ride hailing robotaxi app, right? Wouldn't
Mhm.
that be so cool? Like, I know they've designed this app, right? You saw it at sort of, I think you might have got a sneak peek at
Yeah,
like the
yeah.
So that was like 2 years ago.
Uh-huh.
And so, or 3 years ago, I don't even know. It was like at least 2 years ago. Maybe it was 3 years ago. But they've been really iterating on that, I'm sure. And what if he's going to introduce like some Tesla coin as part of that app? Like, hey, this is how we're going to be exchanging value in the app. Like Web 3.0 is exchanging value. It's not Web 2.0 is read writing. Web 1.0 is read only. Web 2.0 is read write. Web 3.0 is exchange. And so I think he's going to innovate there, and Tesla, could be a great use case for it. The ride hailing, robotaxi stuff, like deliveries, everything.
Yeah. So, okay. So a few thoughts. So I don't know if the opportunity is in Tesla releasing another just coin, another crypto, if it's just.
It could be backed by Bitcoin, though. I'm saying like it could be something backed by Bitcoin.
Yeah, like the thing is, I don't think Elon just wants another coin out there. Like he wants to fix a problem. So I think the likely scenario is he dives into Dogecoin. He's like, oh man, this is a mess. He dives into
I think
Bitcoin.
he's already doing that. Yeah.
He dives into Bitcoin. He says, what's up? Why aren't people innovating on this thing as much as they should? He looks at Ethereum. He says, these
or
guys,
Bitcoin also, he's like, it seems unfair that all these early movers are just buying it up and are going to be the richest people in the world because they just buy it up.
Exactly. And he has this criticism that it's just too deflationary, right? It's just the supply is too capped. So the price moves up too fast, basically, as people buy into it. And he looks at Ethereum. He's like, yeah, interesting. They're kind of moving slow with scaling it. He looks at Cardano. See, here's the thing, man. Cardano to me is one of the most fascinating crypto projects out there. Like I'm naturally skeptical with some of the stuff out there, but with Cardano, like, man, it hits like so many things on the head. Like they actually have like a real vision. They really want to like better the world. They want to really make it the currency for, let's say, Africa and the underdeveloped people in the world. They have like all of the pieces in place. They're gaining, communities. They just have so many things. The question though is like, I think if Elon had something to contribute to crypto, I think it could be either like if Cardano is good enough, then I think Elon maybe would just step back and support Cardano, in my opinion. But
he's never said anything about Cardano.
Yeah, he's never said. I mean, there's been theories that
it could be on his radar.
Yeah, the whole thing of fork in a road that he tweeted before, that's kind of a Cardano phrase. So people were speculating he could be supporting Cardano, but there's no other evidence besides that. But the other thing is, if Elon says, hey, I could create, it's not a coin per se, but I'm creating a platform. I'm creating the next big crypto, ecosystem. And it's going to be based on innovation and what crypto should become, And this would be a big project. It would be a project that is basically trying to, overtake Bitcoin, Ethereum, Cardano, Polkadot, all these others, and become the crypto, of cryptos. Yeah. And I think, that would be the most interesting scenario, because of all the people out there who know how to push innovation. Like Elon has proven that he could do it with just a few % of his time. He could push major innovation.
He can hire the right decision makers, the right engineers,
exactly,
and push it and make a couple of decisions and make it in the right direction.
Yeah, but it takes, I noticed with Elon, it takes him a while. Like, I'm not sure what the exact time frame, but it probably takes him a good 6 to 12 months for him to get really familiar with the technology, whether it's Neuralink or tunneling or satellites, with Starlink, et cetera. There's a incubation time where he he just explores. He thinks that this is a great thing, but later on he finds it's not. And at the end of it, there could come out to be something really interesting, And if there is something like a Tesla crypto, Tesla coin crypto, like a real platform that really is the next big thing, this could be huge. I mean, we're talking about like huge, trillions and trillions of dollars, of value. I mean, crazy stuff.
Yeah. I mean, I just think it makes too much sense to go with the robotaxi, ride-hailing, autonomous delivery stuff that they're going to be doing. Like, are they going to really just want people to transact in like 10 different cryptocurrencies and fiat currencies, or are they going to have their own like central currency that they're going to want to have adopt? I don't know. It seems like a fit.
Yeah, yeah. Master of coin.
Yeah,
So that is
master
the
coin
clue.
right there.
That's the clue.
Yeah, yeah, yeah,
Yeah.
yeah.
Yeah, fun stuff. So there was a YouTube comment here talking about how Biden is likely to get rid of, or I want to say like, who knows, but there's talk that Biden will get rid of the capital gains tax and make it all ordinary tax for people at a certain income level or higher. So it might be something
Yeah.
like $1 million or higher. Have you been following kind of that talk at all? And what are your thoughts with that?
Yeah. I talked to my advisor who's helping me with that. The value-based strategy, and talking about different things. And I touched base with him last week, and he's talking to all his CFA friends and accounting friends and stuff, and they all think, they handicap it at like 70% chance that this happens. That, basically capital gains tax goes 70% is not a sure thing. It's two out of three. That's pretty good though. But you know, and he's looking at like living in Puerto Rico, for example. He just came back from a trip to Puerto Rico, and he's like, yeah, my wife at first, she was like 1 in a million. I'm not going to Puerto Rico. And we just went on vacation. And then he's like, yeah, when we got back, it was like that Dumb and Dumber movie when you're like, so you're saying there's a chance. I feel like it'd be the same with my wife. Like I'd convince her to take a trip with me to Puerto Rico, not like as a way to like move there, but then even though right now she's like, no way we're moving to Puerto Rico. And then when we come back, I'd like convince her on this plane ride, like, hey, look at all the money we'd save when we lived there too. And then she'd be like, possibly, but it would still be a long ways off from like a decision. But I think a lot of people might start moving to Puerto Rico, but a 70% chance, if that's what these CFAs and accountants are handicapping this is going through as, that's a tough pill to swallow, like no benefit from capital gains holdings, it just seems like people are going to just jump through more loopholes to avoid it, whether it's moving somewhere, offshore trusts, all kinds of stuff. People are going to just, a lot of these things they put in, there's not, a lot of people come up with these crazy, tax avoiding solutions for these, the wealthiest people come up with the most, I'm starting to figure out like, wow, some of these people jump through so many crazy hoops. I don't want to jump through a ton of hoops. It's too much work, too much paperwork to keep track of, but I can see the incentive, and a lot of people do. Yeah. I don't know. What do you think? You think it's, you must, be a little, not happy with that the 70% number I just quoted you.
Yeah, I'm like, what, 70%? Yeah, that's do you think they'll make it retroactive to the beginning of the year?
That's what he said. 70% retroactive to the beginning of 2021. Dang. So it's too late now.
Yeah. Man, that's a rough one. Yeah, it's a tough one.
Very rough.
Yeah. What do you do, man?
You just never sell, or you don't care anymore, and you just, you don't hold things long term. You just do all short term trading after a while.
Have you heard of the whole mark to market tax that's being discussed at all?
Oh, is this where they're just gonna like try to tax you on what your paper worth is before
exactly.
you even realized any gains? I think hopefully that's got a harder time to pass, but that's gonna really ruin the economy, I think, if they were to pass that. I mean, especially people like you're gonna tax Elon Musk like X billion dollars, like really? I mean, he's not planning to sell any of his shares anytime. That just, those people don't understand economics, in my opinion. The people that are, I mean, I can see, okay, let's raise, let's take away capital gains tax altogether. Okay, so some crazy legislation, they want to do that, but to market taxes, that's just totally disincentivizes the new businesses, founders, and I don't know. It's going to really hurt a lot of businesses, I think, big time.
Yeah. What do you think of the wealth tax that's being proposed?
Oh my gosh. Well, What's the specifics of that in California, you mean, or just all over? Is
Um,
it the country? I know
yeah,
California is
country.
considering wealth
Yeah,
tax.
Elizabeth Warren. She's proposing 50 million and above. You know,
Yeah,
would start out at 1% per year, and then it would go up.
yeah.
You know, as you have more wealth.
And is that going to be on unrealized gains too? I would imagine it's just
Yes.
on your wealth, right? Yeah.
Yes.
So
Yeah.
yeah, I don't think that's going to pass. I mean, I feel
Mm.
like every couple of years, Elizabeth Warren or Bernie Sanders are trying to bring that up, and it just doesn't. It's a headline, but I don't think there's going to be enough to pass that. I mean, there's so many politicians that have very wealthy families too. Like, but I just don't think it's going to pass.
Yeah.
That comes up a lot. That
Yeah.
seems like that wealth tax idea.
Yeah.
But I'm not. I mean, I just think the government is not a good way to use capital. Like, it's just it's sad. You want to have. I'd rather like be donating money to things over time. Investing in small
Yeah.
businesses. Venture
Yeah.
capital. I'm starting to see is like a huge reason for success in the United States and our economy and our livelihood is because I'm not a venture capitalist, but I could see I think venture funds, like as cutthroat as their model might seem, like they're allowing small businesses to grow and innovate and create like incredible economies in the United States, like and all these things are going to like disincentivize that type of business.
Yeah.
I don't know.
Yeah. Definitely. So. Final question. Derek Elliott on Twitter says Emmet is now financially independent. How does he find purpose in life now that he doesn't have to worry about money? What's his next goal? Where does he see himself in 10 or 20 years? You've mentioned in the past, you're wanting to do kind of your model of your fund is to give half of its, I guess, fund profits to charity.
Half of the fees it
The
generates, half
fees.
of
Yeah,
the
that's right. The
half of
fees
the yeah,
that the fund
the
generates
charity.
to
Yeah.
charity, and you want to set a model for other funds. And you've also shared kind of your concern of kind of capitalism, kind of
Yeah. Yeah,
the
capitalism
future
is
of
just like
capitalism.
yeah. Yeah.
I mean, I was wanting to ask you more about that. Like, how concerned are you really? Like, do you see some
Concerned.
threats, regarding capitalism? Where are these threats coming from, and how serious are they?
Yeah, I mean, I think the younger generation, they're having a hard time catching up, to everyone else who's done well and made money. For example, if you're coming out of college, where do you go? You're voting for, you're going to be voting for people that you want to that give you the best chance to have a good outcome. And, you know, I think capitalism is seen as like, you know, you either swim or you sink, and there's no in between. You either make it or you're not going to make. You're working for the man for the rest of your life, and on a low income. Like starting a small business, there's a lot of people that just will never do that because it's too risky to them, and they don't, or a lot of people that will start a small business and just fail, but they'll learn a lot, you would think. And um, I just think it's like you either kill or get killed. That's how people see capitalism. It's like cutthroat, and um, that I think resonates with younger people that are falling behind and have student debt or whatever. They see all these successful people, and they just feel like they can never catch up, and they feel it's unfair, and it might feel unfair. The results are not fair, right? I think opportunity is close to fair. Sure, there's opportunity isn't always equal, but I think it's close, closer than almost any other society in the world that's gone on. And so there's just not going to be equal outcome, but I think capitalism itself could do a much better job of not being so cutthroat and actually giving back. Right now, a lot of people just are, a lot of successful businesses just pay taxes and pay the minimal taxes possible and just focus on growing and growing revenues, growing shareholder value, and making everyone richer that's part of the company or invested in the company. And I think that's been the focus. And then you have like people like the Salesforce, CEO. I think he's got something where he's kind of changed some. He's the 1% of your time, 1% of your money. So that's a great starting point. For example, ARK Invest, we're interviewing tomorrow. They started selling swag for donating. That's a good thing, you know. But I think if you could have companies, especially Wall Street, which is seen as like the most capitalistic pigs of capitalism, you know, hedge fund managers, Wall Street, if you could start having them give back aggressively, you know, that could really help the world, you know, it could help the perception of capitalism amongst the younger people if they see like, oh, you know, my student loan is being forgiven because of this charity that helps pay off student loan or whatever. You know, there could just be a million use cases for donating. You know, you have multi-billion-dollar hedge funds making billions in fees. Like they don't have to keep that all for themselves. I mean, they want to. Why? You know, everyone's greedy and wants as much money as they think they can earn. But ultimately, at the end of the day, like you have to figure out like, why do you want so much money? You want to make the world a better place, I would hope, most people, right? But everyone sees how to do that a little differently, I guess. And the way I see it is like, let's try to improve the perception of capitalism so we don't go into like a socialist type, you know, environment where it's too fast, you know, I think there is a bridge to go to like universal basic income. And I think it could be done well and if it's done right, but I think it could also be done way too brashly and quickly with like, you know, the wrong election cycle. And then all of a sudden you have all these taxes we're talking about, like even more aggressive taxes going through and everyone just being like upset and just the economy going into a tailspin, people leaving the country, you know, all this stuff could happen. But that's just my own fears. And but I see them as realistic, you know, in the next one or two election cycles.
Yeah. I think, I mean, when I think about some of these issues, I think of like kind of the bigger trends in like historical, like where are we in the bigger, like multi-100-year view. And
Yeah.
what I see is like the forces of technology are changing society so fast. It's just like with computers and internet, it's like the amount of change is just unprecedented, you know?
So fast.
Yeah, what people have to go through in terms of change in 5 years or 10 years, that's a lifetime of change in previous generations, right? And then with technology, combine that with, you know, more of a globalized, you know, world, what you have is you have this winner takes most, you know, kind of effect where you have these network effects where technology is used to create amazing value, but it's hard to replicate that value without the same network effects and distribution that these large conglomerates have. And what you have is you have the wealth of technology being kind of, you know, brought together with the companies that are holding those network effects. And if you're connected to one of those companies, either by owning shares as a stockholder or by being employed by one of those companies and getting equity or salary, or if you live in an area that is close to these, you know, big companies or companies that are taking advantage of the bigger tech and globalized, you know, trends, then you can benefit in some way. But if you're not, if you're kind of like in rural America, far away from, you know, any of this, how are you benefiting from it, you know? Like the massive amount of wealth being generated, it's like you're so far, you know? I think that's part of the tension is you have this dichotomy of those who are benefiting and those who aren't. And then what you have that worsens everything is you have this complete stall of the government. Like when have both sides of the aisle like come together and actually done some legitimate work, you know? It's like, it's complete stall. It's complete inept. Like we have an inept kind of a vacuum of leadership, you know, in government. And this has been going on for a long, long time. And you combine that with the things that are happening with technology and globalization, and you realize that this is becoming a tragedy. Like, you know, if you had, you know, capable leadership who were able to make the right moves, then you could come out of it like, you know, well off, you know, better off. But you have kind of just the worst. I mean, you just have the worst situation to deal with the changes, you know, happening, it feels like.
Yeah. And the leadership, the thing about the government, like I totally agree with you. It's the system. It's the system of the government we're in, and it includes the media too, you know, and you combine it and there's no way it can see, even if you have the most, you know, impressive leader, as president, and the, a couple of very impressive Congress people in there. Like, I just don't think the system is set up in a way to let it succeed at this point. Like, when you combine the media craziness of politics now, it's just pitting people against each other constantly, and it's a tragedy, like you said. And so I think you got to look elsewhere than government. Like, government's not going to be the solution. That's going to be the tragedy, in my opinion. And so that's why I think it's got to be up to the businesses that say, hey, let's try to make this right. Let's try to give back to, people that need it, and try to help the world in ways the government is obviously failing at, So that's my thought. I mean, the future of government is dire. And
I mean, like there's some simple things that could happen. Like, for example, like, you can, if you're in government, the problem is also, like, when you try to govern by committee and by consensus, like, you barely get anything done, because, like, there's too many special interests involved. But if you really had, like, a capable leader who is saying, okay, one of the things I think you need to do is you need to encourage people to start and to move their businesses and to start businesses in areas that are not taking advantage of the great wealth that's being created with tech. Meaning, you need to say, hey, we're going to give huge tax breaks to companies who set up shop in, like, these places that are just, more rural and kind of like smaller cities or towns, different places where, with the internet today, you can do business anywhere, it's like you can. And so what you do is you diversify, you distribute those gains by encouraging and by giving incentives for people to move and to go to other places, and that's something that doesn't require a ton of money. Actually, it just requires, like, a shifting of tax incentives in a way. But that's just simple things like that could do a huge amount of good, because think about the divide in our country. A lot of it is coming, like, from dissatisfaction, discontentment of wages just being stagnated, being left behind, of just seeing wealthy people and wealthy groups of people just take off with, wealth and tech, and the rest of society being left behind. But you could do certain things, some tweaks that make a huge difference if you're focused on the problem, if you're a capable leader, but that's what's missing, in at least, in our society, in my opinion. And I don't know, how you can fix that at this. I mean, we'll see. I mean, in some ways, COVID is kind of moving people out, it seems like, of certain urban areas, but I don't know if it'll be enough really to, distribute, right, the wealth and the gains across society. Yeah.
I think COVID, we'll look back and it'll be looked on as something that was actually good long-term in the trajectory of just, there's a lot of good things, but, this past year has been very tough for a lot of people, obviously, depressing, being locked up in wherever for a year, but like you said, I think it's done a lot of good in terms of forcing certain changes that need to happen.
Yeah. All right, Emmett, it's been fun chatting with you guys. Or fun chatting with you and with everyone else on Twitter and YouTube as well. It's fun. It's just fun, just catching up, but also interacting with folks and getting to know people. It's fascinating. I don't think investment was like this, 10, 20 years ago.
It's so bizarre. You would never imagine, like, 10 years ago, doing this stuff regularly. Like, so many people have YouTube channels or podcasts talking about investing, It was just like network TV before. Yeah,
even better in some ways. All right. All right, Emmet, take care. We'll see you.
All right.
See you
we'll talk tomorrow.
All right, yes. All right, take care. Bye.